Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the Cash Flow Memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
The Exhibit C, the Crown Prince had a very elaborate welcome from the Trump administration. I think everyone in the business of producing oil was afraid that somehow in the press conference, the Crown Prince and the president would say they agreed on $50 oil, but apparently that didn't happen. Well, it didn't happen in the press conference anyway. The statistics on Exhibit C don't change. The OPEC position is that they're going to not have any increase in production during the first quarter, and their increase for December was low, was like 137,000 barrels a day. So they're addressing the oversupply. The main problem, as we say every Wednesday, is demand. If you go down and you look at the liquid fuel consumption part of this, it goes up by about 1 million barrels a day for many years. Now it's only going up 700,000 barrels a day. But it's China used to be half of the increase, and now China's flat as a board, as the U.S. is. So I guess the way to consider it is China now is the second largest economy in the world, is now mature. When an economy gets mature, oil demand stops growing. It'll take longer to work off the surplus at 600,000 or 700,000 barrels a day of increase each year, but it will work off. And in the meantime, there's enough macro issues, whether it be Iran still under sanctions or the possibility of Russian sanctions, so that, the oil WTI may hold at 60, which is what's been happening. In natural gas, demand for LNG is terrific. Supply is still marching upwards. Gas supply, think of this, gas supply in the years from 21 to 25 went up by 16 Bs a day, 11 of that from the Permian, 3 from the Haynesville, and 2 from the Marcellus. And that increase in the Permian is still happening. I think most of the increase from 106 to 108 is production in the Permian. You see that in the Waha price, which is the hub in West, has been trading negative. So that will get solved with more pipeline capacity at the Gulf Coast, but they can get power, which was terrific, 1.5 Bs a day. There is 55. I think what happened is coal plants are not being closed by the Trump administration. So coal is taking some market share in power generation. I think that will probably reverse in 26, and you'll start to see it go up again. LNG has been terrific, and it's more than made up for power demand being leased. On the macro, U.S. government revenues and expenses, now people are saying that 26 will be 400 to 500 billion reduction in deficit, which is really pretty good. I don't think there's anywhere else in the world that's doing that. I think China is running a bigger deficit. Europe is running a bigger deficit, paying for their own defense. I don't think there's too much change in Japan. They always seem to run a deficit. So by the time we get to this next year, and this is not just a forecast actually happening, it may cause the U.S. to have a somewhat stronger dollar. And I think that would help the capital markets. We can't have the largest economy in the world running deficits of $2 trillion. And if you get down to $1.5 trillion and are headed further, if you look at the bottom of the exhibit, is your ratio of, and will start to stabilize. It was 79% in 2018, 81 in 2019, and then COVID took it all the way to 98. And it's been kind of flat at 98, maybe 102 last year. But it will start to stabilize and go down, and that will be really good news. For our 10-minute episode, we want to talk about Apple. I'll lead off, and then Mike and Jason will take it from there. Apple has Siri. All of us have iPhones. I suspect of the people on the phone, 90% of us have iPhones. Some of us use Siri. I don't use Siri, but I mean, it's a factor in our life. Siri badly needs upgrading. Apple's tried every which way to develop software to upgrade Siri. So their latest is they're going to buy one of the Google models, Gemini models. But because Apple takes security very seriously, they want to run it on their own servers. So Google apparently has agreed to install a language model and presumably update the language model on the Apple servers. If you turn to page 1, which is updated for the 9-month financial last weekend, Apple stands out because their capital spending, and this is at a run rate, is $12 billion as compared to Amazon at 110, Alphabet at 80, Microsoft at 70. Apple distinguished itself by not spending a great deal of money on infrastructure and servers. Jason, do you think they'll be able to continue that if they're running a language model on, granted it's Google's model, on their own? Will all of a sudden Apple start to spend like the rest of the tech worlds?
Yeah, they will have to increase spending. They'll have the same advantage that Google has where it's their own hardware. I think their data center is powered by their latest generation of chips, the chips that are in the MacBooks and the like. So it's pretty interesting that they were asking Google to tailor their algorithm, tailor their model to run on their chips. So they'll have advantages, but yeah, they'll have a huge increase in demand for inference.
How hard is it for Google to do that? Presumably they've got all this installed base of their own chips. How hard is it to tailor the model so it'll run on?
It's not trivial, but at the scale at which they operate, tens or $100 million, it's a rounding error, I guess, in the whole calculus. So when I thought about this decision to purchase an outside model, it reminded me of the first time they had to purchase outside software. It was when they acquired Steve Jobs' company, Next.
For their operating system.
Right.
Yeah.
And so at that point, their operating system was clearly behind everybody else. And where are we today? They're clearly behind everybody else in large language models. So it's actually a very Apple decision. They're not acquiring a company. They're paying a licensing fee to a company that they've been partnered with for a long time. But it does seem like a very Apple thing to do. And then thinking about this CEO transition. So Jobs came in, and from there, they significantly improved the quality of their software. Their hardware was sort of so-so. And over time, towards the end of his career, and as they transitioned over to Cook, the hardware got much, much better. And software, relative to the quality of the hardware, where under Jobs, quality of the software was unparalleled. Today, the quality of the software, regardless of whether you're talking about Siri or the operating system, is not what it used to be relative to what else is out there. So thinking through the CEO transition, why would you put anybody from the software side in charge of the business? You wouldn't. So the logical choice is this John Turnus guy, who's the head of hardware. That's sort of the question is this Google relationship, like how permanent can it possibly be? And if it is going to be really permanent, is $1 billion a year enough to keep Google happy?
I don't think that Google can do it for that price.
For them, it's additive, right?
No question. But keep in mind, we know from the antitrust list that $20 billion a year goes from Google to Google choice for search.
Yeah.
It's only 5% of $20 billion, but I just don't know that Google. It seems to me it's going to cost Google more just in engineering labor to try to take care of the model on Apple servers.
Right. It's just like they're doing it for free or
Cost, like,
the lowest number they possibly could charge.
and then when you need us, we'll up what. Yeah.
Yeah. Basically saying, good luck, go develop your own model.
Right.
In the meantime, we'll be happy to supply you with this.
Yeah.
And we'll see. It'll be very interesting to see where it goes.
Now, one of the things I didn't understand, and you, Jason, are going to have to explain this, is why wouldn't they just use the Google data centers? That's verboten at Apple, right? Because then they
it's a betrayal of everything that they've built their reputation on, and
right.
all of the antitrust cases and all of this stuff that defines the way they operate as a business,
Including security, right?
Well, most especially.
Yeah.
I mean, that's a lot of it, and the way they've defended the way that they do things, the way the App Store works,
Right.
has to do with security. So if they were to deploy this through somebody else's servers, I just don't think it would work.
Yeah. And here's a question. Who do you think does more revenue with TSMC, Apple or Nvidia?
Oh, maybe Nvidia at this point.
But historically, it's been Apple, right?
Yes, absolutely. Yeah. But Nvidia gets it's swapped where they get the latest and greatest fabs out of TSMC now. So,
is that true for the next generation? I think it was in maybe the last one, but I think for the next generation, Apple will have it because AMD will be on that node before Nvidia will be.
Really?
For the 2 nanometer. Yeah.
Wow.
Which will be fine because, like in previous generations of Nvidia and AMD, they time their location on the nodes so that they're far enough ahead.
Jason, what if we left out to have a proper hearing? We're going to leave till next.
Yeah. I think that Nvidia had supplied something that didn't go so well and refused to get product back or something.
Right. And this is when the Nvidia was like nobody would
have bankrupt Nvidia. So we'll cover that in a detail next week. I think that's a good one.
Anything more on Apple software, Jason?
Yeah, overall, I think I've been hard on Apple, but I think this might be the best move possible for them. They're getting an incredible deal at $1 billion for Gemini. I don't know how much it costs to train each version of Gemini at this point, but it's got to cost tens of billions to build the data centers and do the training. So $1 billion's a deal. And the fact that they're going to be able to run this on their own chips, I think long term is also a big win, because at some point the hardware catches up to these models where, potentially you can have an Apple chip in an iPhone that runs one of the state of the art models. So if that was the case, that'd be a huge win for Apple as well. And then the third thing is the new version of Gemini links all the Google tools together. So if that similar feature exists in the iPhone where they can link to all the different apps in your iPhone, that's really the killer use case for an iPhone. And that's where Siri's fallen apart. You can ask it to set timers in the timer app, but other than that, it doesn't really get it right. So I would love to use it to have it dictate and send emails and that kind of thing. So hopefully that comes to the iPhone. We can all use it. And really the rest of the industry didn't take advantage of the year head start that Apple gave everyone. So hindsight now, this could be great for them.
Let's continue. Next week, we promise to track down the feud between Jensen Huang and Steve Jobs. That'll be fun, and how that feud has been maintained by the two organizations. Maybe we'll, all of a sudden we'll pick up a headline that says Apple's going to buy a bunch of Nvidia chips for their service centers. That our focus on the feud will be irrelevant. The feud will be settled, but I don't think we're going to see that headline. And I guess they have their own chip designs, which Jason, they've been very good at. I mean, they've been good at designing chips.
But they haven't built much in the data center. Like Jason said, the ones that we know they are using the data center are basically just the ones designed for the laptops.
Yeah. So maybe a bit of a challenge. Since we've given healthcare kind of short shrift the last two times because our 10-minute episodes run too long. Jason, why don't we cover the healthcare stocks on the 20 pages? And if we go from the back, the first one to look at is Harrow. That, I guess, is mostly good news at this point in terms of Harrow's progress in trying to build up their revenues.
Right. Yeah, that's one of the few we covered last week, and it is for the large part good news. They have one drug that they're bringing back to market that is the sales are slow to take off, but they have a new strategy, and we'll see if it works. It's really a complement to their sales force, so they're trying to, rather than sell to different verticals with surgeons, their sales forces and focus on surgeons that operate on the retina and sell all the products.
Here I've switched to page 19. Novo Nordisk has a patent cliff or something and has lost the bidding for that company in the UK to Pfizer. If you're sitting there in Denmark, or are you say the guys from Indiana have won?
Maybe winning, but they're being aggressive on pricing now with their line of Ozempic and Wegovy. They're GLP-1 drugs. So their new announcement on pricing there is new customers will receive it for $199 a month, and then customers after a few months transition to a $349 a month plan. So they're undercutting Eli Lilly on pricing for this to really try to win back customers, because Lilly's beat them in this market. What's really interesting though is this is one of the rare spaces in healthcare where the free market gets to work, where there's two large competitors, there's a threat of some startups, and the drugs are largely purchased outside of insurance channels, so self-pay. So in the last year, we've seen the price of these go from $1,200 a month to $200 a month.
Regeneron, part of Regeneron's product slate is what Harrow is trying to compete with, right?
Correct. They have a biosimilar to Eylea. So Regeneron really faces a number of competitors there. It's rolling off patent. Their next generation of Eylea, the HD, it didn't have a big adoption in the market. The biosimilars are going to be a decent amount cheaper. And then there's a set of new therapies that are, rather than injections, they're kind of this implant, slow to dissolve kind of material that they implant into the eye, which sounds odd, but the end result is you only have to go to your doctor either every 6 months or every 12 months rather than a monthly injection. So a lot of competition for Regeneron. It's a great company, but yeah, a lot of pressure.
Yeah. Page 15, Vertex, pain medication is a little slow. Cystic is very healthy, and I think what I recall is they have a medicine is make it accelerated treatment.
And now that the government's opened up again, hopefully we'll get news on drugs covered under the No Pain Act shortly. And I think that clarity will provide insurers what they need to know to start adding coverage for the pain medication.
Then we've got to get off healthcare and on to the first few pages, but I'm amazed on page 15 how BioNTech has hung on to their cash and Moderna has not. I mean, they had these windfalls that came from COVID, and BioNTech is like 14 billion euros, and Moderna's down to $4.5 billion. To get that couple from Turkey who were the founders of BioNTech are just more careful. I mean, I remember reading an article about how they ride bikes to work, even though they're each worth several $billion. So I guess that's a little different than the Moderna group. Any other comment, Jason?
Well, we don't have enough time to cover it, but we've been looking at a new angle for those two companies.
Next week, then. Next week, we have to keep some things in reserve. As I said earlier, I updated page 1 for the 9-month financials, things I noticed in the numbers we've already commented on, Apple having such relatively low CapEx. Amazon is just gigantic. I mean, Amazon's free cash flow now is down under 30 billion, but they have a $90 billion R&D budget and 110 billion of CapEx. I mean, it's just remarkable. They also said, I don't know whether this is reliable, but I mean, they are the largest, have the most capacity in data centers. And they said they were going to have a program to double that capacity. Some significant amount of that 110 billion going into data centers. Or Microsoft with $70 billion capital budget, again, a lot going into data centers. Some slowdown in that seems off in the distance somewhere.
Yeah, I think when you think about the data center CapEx, we have very clear line of sight for the next couple of years on what spending is going to be. And every year we get to this point where we're like, well, it's going to taper off.
Yeah.
And it hasn't yet. And
it seemed to be starting to taper. You know, we heard about Microsoft dropping leases, but now it's back on in a significant way.
Yeah. I think that goes back to, remember the beginning of the year, the DeepSeek model
Spooked people.
Well, it spooked people thinking the wrong way about it, that because you could get more out of less, essentially, but get more
Trained for less money, less greatly.
Yeah, I mean, those numbers were fudged significantly, but the innovations they had in the actual model to make the model run more efficiently on the chips were the most interesting part of that.
Right.
And so the fear was, we're overbuilding hardware because now we're going to take existing chips and make it more efficient.
Right.
But the reality is if you get the cost down per unit, per token, people will consume more tokens because the reasoning models will basically use a lot more tokens to generate a higher quality of result. And it's taking time for that concept to trickle through the whole ecosystem. So we're right back to building big again. So
yeah. And then you turn to page 2, the software page. You want to go to here while we're on CapEx is Oracle. Because Oracle has kind of tied themselves to OpenAI. And Oracle's run rate capital spending is $27 billion. But given the amount of data centers they've committed to build for OpenAI, and Oracle doesn't have the same amount of cash flow that Microsoft, not even close to Microsoft and Amazon and
a lot of debt.
And a lot of start out and a lot of debt. That brings us to the third page, which is Nvidia. Reports their earnings after the close today. All this CapEx is resulting in more sales for Nvidia. Jason, the percentage of sales from the 5 or 6 hyperscalers, Nvidia, I think has been running something less than half. Is that a reasonable number, do you think?
Yeah, and I think it's pushed a little over half because so much more of their networking equipment is now starting to come from Nvidia, and that drove it up.
Right. What's your sense, Jason, on the other half? I mean, is that JP Morgan for its own servers or is that R&D at Pfizer or Merck or Lilly for their own, or sovereign wealth funds who want to have data centers in Abu Dhabi? And where is the rest of the half?
Yeah, all of the above. I bet the U.S. government is a large buyer. They sell a lot to different research organizations, different groups that are building supercomputers. So the modern supercomputers are all GPU clusters. It's a diverse set of customers rather than the concentration. The other half is concentrated on this handful of companies.
You could classify the rest of the world data centers for the most part as neocloud because, I mean, Amazon and Microsoft all operate, and Meta, for that matter, operate data centers in other parts of the world.
Nvidia at last Friday's prices, 4.6 trillion, is bigger than everyone on page 1. Largest on page 1 is Apple at 4.1 trillion. Second largest is Microsoft at 3.8. Microsoft is the smallest in terms of sales, interesting enough, at 290. Alphabet. This is extraordinary. Alphabet has 390 billion of sales. Amazon, of course, has 700 because it's bulked up by their warehouses, and Apple's 400 billion. But I mean, now this is a run rate for Nvidia. When we slot in the results through October, it'll be higher. But run rate, I have it based on the 6 months to August, 170 billion. But the extraordinary thing about Nvidia is 170 billion of sales, but they bring over half of that down to free cash flow. So that's after CapEx, after income tax, after R&D, just extraordinary profit.
Yeah, I think from their earnings, the thing I'll be interested in is the gross margins and if they hold up, because demand exceeds supply for the foreseeable future. So the sales will be there. But in the near term, there's usually some cyclicality where when a new version of their chip rolls out, the customers that order all the networking equipment get a higher priority. So those tend to be higher margin sales. And are we at the point in the Blackwell cycle where they're not selling as much networking equipment? So that'll be interesting to hear. And then longer term, the margins, everyone pays the Nvidia tax today. So, can they keep that when the budgets can no longer grow to infinity?
With that, we're through. We're an admirable 4 minutes over our time. It's a little, normally we run 5 minutes over, but I guess we're more efficient when Mike and Hunt are in the same place. So we save at least a minute. Everyone be well and stay healthy, and we'll be here exactly 7 days from now. Take care, everyone. Thanks for listening.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the host nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to and no reliance should be placed on the fairness, accuracy, timeliness, or completeness of this information. The host and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future and may or may not hold positions in the securities mentioned.